Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in.
Okay, happy Wednesday everybody. We have had a few days of economic heavy news. While we still need to cover the housing crisis at the end of today's video, let's begin by looking at developments from a few other areas. And first up, state-owned PRC company China BRI Group Co. Limited has had to suspend construction on a massive hydroelectric dam project in Niger after a coup in the West African country triggered financial sanctions, cutting off funding for the project. According to UK-based Reuters, the company said in a letter dated last week that it was, quote, forced to halt all our construction activities, end quote, and that local workers will receive back pay owed to them. The so-called Kandanji hydropower station, located 180 kilometers, about 111 miles, northwest of Niger's capital, is an $800 million project and part of Beijing's Belt and Road Initiative. This episode, which comes as several other members of Xi Jinping's flagship foreign policy initiative are facing sovereign debt crises, is yet another reminder of the risks associated with some of the projects funded by the BRI. The project broke ground in 2019, just before the pandemic, and was designed with an installed capacity of 130 megawatts and an average annual electricity output of about 617 million kilowatt hours. Niger is one of the least electrified countries in the world, with only 10% of its population having access to electricity, according to World Bank data. The project had been scheduled to be completed by the end of 2025, however the completion date currently is now very much in the air. Next up, according to a new audit report by the southern region of Guangxi for 2022, universities are not doing enough to turn academic research into market applications, along with a slew of other concerns. While this is just one region, some analysts argue that the issues identified in the report exists in many other parts of the country too. For example, Liu Riming, a professor with the National Development and Strategic Research Institute at Beijing-based University, expressed to state media this week, quote, essentially, this reflects a nationwide issue, end quote. Well, if that's the case, what does the report say? Well, according to the new audit report, 9 universities in Guangxi had, quote, extremely low conversion rates in bringing inventions to the market, end quote, identifying this rate at below 1% for the period 2020 through 2022. Hong Kong-based South China Morning Post reports that, quote, the findings highlight a long-standing weak link in China's push to strengthen basic research, which it views as crucial to becoming a technology superpower by the middle of the century, and to breaking free US tech containment measures, end quote. The above-mentioned professor with the National Development and Strategic Research Institute explains that, quote, researchers appear to be conducting basic theoretical research, but often they produce a large quantity of useless research output that is primarily focused on paper-centric assessments. These outputs are neither purely beneficial for advancing fundamental theories, nor directly convertible into practical applications. Therefore, this represents a state of idle and less effective research, end quote. Adding that an over-reliance on papers and an ignorance of practical outcomes, quote, strike at the heart of China's technological aspirations, end quote, and that incentive mechanisms that adhere to such standards are at risk of encouraging subpar research. The South China Morning Post article observes that Beijing has long called for reinforcing basic research to achieve high-level self-reliance in science and technology, and for China to become a leading global technological force. According to the National Bureau of Statistics, China's total research and development expenditures rank second in the world, tripling that of 2012 levels. However, this audit report suggests that Beijing is getting very little bang for its buck currently, and that many funds are going unused or sitting idle. Analysts argue that reform is needed, and more crucially, a market for the conversion of scientific and technological achievements into practical applications needs to be developed. However, this takes time. Quote, there are policy restrictions that need to be overcome, such as limitations on cross-domain trading, which hinders the construction of a unified international market. This is a significant constraint in China's current situation. End quote. The 15,000-word Guangxi Audit Report was briefly published online about 2 weeks ago, before soon after being removed. Next up, the housing crisis. Hey everyone, if you enjoyed today's episode of China Update, don't forget to hit that like button. Liking, sharing, subscribing. Only 50% of regular viewers are subscribed to the channel. These are all big helps for the channel and help China Update grow. And for anyone who can go the extra mile and help me keep this channel financially sustainable, Patreon and Buy Me a Coffee links are in the description below. As always, thank you so much everybody for the ongoing support. Finally, for today's video, as regular viewers know, the market and regulators have been following the development of Country Garden quite closely. Last Monday, the massive private developer, which prior to the housing crisis was China's biggest by sales, missed bond payments and is now in a 30-day grace period. The concern is that a Country Garden default could end up being as destabilizing to the already shell-shocked industry as the initial Evergrande default. Quote, the Country Garden default could be as influential as Evergrande simply because it is so huge. Things may get worse before the government reacts. End quote. The company is not in a good place either. Its share price has fallen below $1 Hong Kong dollar, Country Garden's losses amounting to. We remember that the company expects to report a loss of as much as $7.6 billion in the first 6 months of this year, and the company so far has racked up $200 billion in unpaid bills, and that is what we know about. Obviously, it's not just bond owners that are in line to feel the pain if Country Garden and others go under. The company, by one estimate, still needs to deliver nearly 1 million apartments across hundreds of cities in China. Billions of dollars is owed to suppliers like painters and construction workers too. Experts fear that Country Garden's troubles will spill over into the broader financial markets too. Indeed, with financial giant Zhongzhi, which we discussed yesterday, we can see that trust companies with high exposure to real estate assets and local banks with high exposure to developers could be pulled into their own crises if the housing sector cannot be stabilized. Within the housing sector itself, Country Garden's woes are hurting other developers through the general hit to market confidence too. Dollar notes from Long4 Group Holdings Limited and China Vanke Co., two of the country's few private sector investment-grade developers, lost at least 5% on Monday and became the worst performers in a Bloomberg high-grade index. They recorded further declines on Tuesday. Also on Tuesday, as we saw in yesterday's video, the People's Bank of China, in a surprise move, reduced a key interest rate by the most since 2020. Developer dollar notes were also hit due to yet more disappointing data published by Beijing this week. According to the National Bureau of Statistics, investment in property development totaled 6.77 trillion yuan, $933 billion from January to July, down 8.5% from the same period a year ago. The decline widened from a 7.9% drop in the first 6 months. Property investment in July dropped 28.7% month-on-month. Sales were bad too. Property sales by floor area dropped 6.5% year-on-year during the first 7 months, compared with a 5.3% decline in the first 6 months. Month-on-month, July sales plunged 46.1% from the previous month, the worst performance since January. The chief property policy researcher at the Guangdong Urban and Rural Planning and Design Institute, speaking to Chinese financial media outlet Caixin, explains that the weaker performance in July partly reflected seasonal factors, as the property market is traditionally slower in July and August, but admits that, quote, it also indicates waning market sentiment following a spreading crisis among major developers. End quote. The market is thus likely asking, in this environment, if major players like Country Garden cannot survive, what chance is there for the others? Quote, for companies like Long4 and Shenzhen, if they have enough cash flow to cover their operations, they may survive this year. But if the market doesn't take a turn for better by then, How long can they last? End quote. Okay, that is today's episode of China Update. Thank you so much everybody for watching. Have a wonderful Wednesday, and I will see you all tomorrow.